Good day, ladies and gentlemen. Welcome to my channel. Today is June 3rd, 2023, and I'm going to discuss gold and senior gold miners GDX. Recent corrective and sideways price action in gold has been quite frustrating, forming more bearish sentiment. Such environment is perfect for a surprise upside price action. In my opinion, gold is nearing the end of a declining cycle, and next week could already mark the start of a rally. Let's look at several factors that support my expectation. Firstly, I would like to look at a monthly chart, which I discussed extensively in my last video. Monthly candle of the previous month could have closed at the lows around $1,930 level, but bulls managed to push closing price to $1,962. The close wasn't ideal, but equally it wasn't the worst one. Furthermore, we need to keep in mind that gold keeps retesting the upper band of a 3-year descending channel for a third month, and so far successfully holds. Secondly, gold formed an inverted hammer candlestick on a weekly chart. Typically, an inverted hammer is a bullish reversal pattern, suggesting the financial asset is nearing the bottom in a downtrend. Next, gold's decline was held at a 7-month trend line. It is typical for a trend line to be broken, and I am not sure if a small violation qualifies for such a breakdown. It is possible that the metal violates the trend line once again for a short period of time, but I don't expect a major correction taking gold sub $1,900 level. In my opinion, recent low at $1,932 should hold, and if doesn't, I believe the downside is limited to another $10 to $15 at most. Furthermore, note the similarity of bottoming price action between early March and now. A week-long grind higher and then a sudden one-day scary sell-off. Note that a one-day strong sell-off also happened on Friday back in March, largely marking the bottom. It is also typical for gold to be taking down badly on Fridays just before a weekend. I call it a Friday syndrome or a Friday anomaly. Anyhow, just wanted to underline the importance in the similarity of price action, suggesting that gold might be close to forming a bottom. Additionally, gold is approaching a 100-day moving average, which could act as a support. Again, a minor violation of 100-day moving average is permissible, but I wouldn't expect a major sell-off from here. Also, on a 1-hour chart, gold managed to break out from a descending channel and presently headed for another retest of the upper band. Note the symmetry in the price action, suggesting that it could turn out to be an inverse head and shoulder pattern should gold hold at present levels. I wouldn't put too much faith into this, but very often markets respect symmetry. Finally, I would like to have a look at the price action between gold and GDX. While gold erased almost entirely the weekly gain, GDX managed to keep most of it, adding 3.5%. Such price action also suggests that the decline in gold might be coming to an end. Furthermore, note how both gold and GDX bounced from a 7-month major rising trend line. To sum up, I believe gold is in the process of completing a recent decline and should largely hold at present levels. I see very limited downside from the present levels. If gold to reverse from present price levels, then it should experience 8 to 10% rally towards the second half of June, with a minimum target of $2,100 level, towards the upper band of the rising channel. I think very soon Fed will start the printing press, which will be a major catalyst for a gold's rally. Surely I could be wrong in my analysis, and in such case I will issue an intra-week video. This is it for today. Stay well and enjoy the weekend. Please note that this video is not an investment advice and prepared solely for educational purposes.